You may have heard of asset allocation, which is an important component of any investing or financial plan. But we also want to focus on asset location. What is asset location? What does that mean? Let's talk about buckets. As we look at someone's financial plan, we can group assets into different buckets. So for this conversation, we're going to have 3 buckets, each with a different tax treatment. The first bucket will be taxed as ordinary income when money comes out of the account. Common accounts in this bucket include traditional IRAs, pre-tax 401ks, pensions, things like that. The second bucket allows for tax withdrawals once certain age and time requirements are met. While there are several assets that can fall in this bucket, today we're going to highlight Roth accounts. So Roth IRAs, Roth 401ks, etc. The third bucket will be taxed as capital gains as the account grows. Now, this may be an investment account or a trust account or some other non-retirement asset. When we have all of our assets in a single bucket, it limits how we can manage taxes in retirement. So even a little diversification of buckets allows us more flexibility when it comes to retirement income. So for example, let's assume there's a significant change in tax brackets around $110,000. At this point, you move from the 12% federal tax bracket to the 22% federal tax bracket. So for this example, let's assume that you need $150,000 next year to live your life. We can take the first $110,000 from the ordinary income bucket, keeping you in the 12% bracket. We can then pull the remainder from either the tax-free bucket or the capital gains bucket, keeping you out of the much higher 22% ordinary income tax bracket. The same strategy can be used for other thresholds throughout retirement. For example, your Medicare premiums have brackets at certain income limits. Or it could be other income bracket thresholds. For example, the 24 to 32% is another big federal income tax jump. The important thing is diversification allows for flexibility in retirement. If you find one of your buckets is empty or low, there are tax strategies that we can implement to fill those buckets. One popular strategy is the Roth conversion, where you move money from your pre-tax bucket into your Roth bucket. For this strategy, it's important to monitor current taxes in relation to future taxes. If you have questions about your buckets or your asset location, we'd love to visit with you and talk about different strategies that may make sense. You can check us out at www.impactwealthplanners.com. Again, my name is Ryan Wilkerson with Impact Wealth Planners. Thanks for tuning in today.